Hello and happy Wednesday, everybody. My name is Steve Maldonado, and I'm so excited to be back in the chair presenting NuView's workshop at 1 on our realistic real estate market for 2023. Just a quick disclaimer before we get started. NuView is a passive IRA custodian. We custody IRAs, 401ks, ESAs, and HSAs for the purpose of alternative asset investments. All of our investors are encouraged to do their own due diligence on these investments. However, we are always here as a resource to talk to you about what that looks like through a self-directed IRA or 401k. So if you do have any questions, feel free to reach out to us directly. Throughout the presentation, we encourage your engagement, and there are two different ways to submit questions. The first being through the registered landing page. Below the live stream video, there's actually a form that you can complete where we will be gathering questions and then answering them at the end of the presentation. Furthermore, if you are tuning in on social media channels, Facebook, YouTube, LinkedIn, you're more than welcome to submit your questions in the comments section. Again, our team will gather those and answer them all at the end. Join us on February 15th for our panel interview. We will be bringing back all of the speakers in our series to talk to them about the realistic real estate market and get some great insights from industry leaders on a variety of topics. We're so excited to have them back. And if you missed any of the videos along the way, go back to our social media channels, YouTube, Facebook, LinkedIn, like I mentioned, and get caught up. Again, we encourage your engagement for that as well, and would love for you to submit some questions beforehand. You can do that by following the link provided in the QR code on the screen. And without further ado, we are very excited to be introducing Carrie Cook. She is the president of Ignite Funding and will be here to talk about investing through your self-directed IRA. Carrie?
Hi.
So thank you so much for joining us.
Thank you for having me. I appreciate it.
Yeah, it was our pleasure. Again, we're so excited to have you on, and I'll let you take it away.
All right. Thank you so much. I am the president of Ignite Funding. I have been the president of Ignite Funding since 2011. And since that time, we have funded just shy of $1.5 billion in trust deed investments. So where other mortgage brokers will only originate the loan, we're not just going to originate the loan. We're going to service that loan. So as the borrower are making their payments to us, we are processing that to our investors. If for any reason that a borrower does not make an interest payment, we will go after that collateral on your behalf, collect it through the default process, foreclose on it, and then disposition or sell the asset for you. So we are a full service operation, and that's super important. So if you're ever looking to work with a mortgage broker, make sure they're providing you full service. They're going to stand behind what they're underwriting. So what is a trust deed? I get asked this question a lot, Carrie. What is a trust deed? What's the difference between investing with Ignite Funding and investing in a fund? Well, investing in a fund, you're investing in the people that run the operation or run the fund. When you're investing with Ignite Funding, you're actually investing in the collateral, right? Now, are you investing in the people somewhat? Of course you are. The people that are underwriting these loans are employed at Ignite Funding. The people that are servicing these loans are employed by Ignite Funding, and the people that are collecting on the loans are employed by Ignite Funding. But the collateral that you're taking, the investment that you're investing in, is not the people. It's not membership in a company. It's actually ownership in the asset itself. So what is a trust deed investment? A trust deed investment is when a lender, that's you, the investor, lends money to a borrower or home builder or developer that is secured by the real estate itself. Super important. Now, what types of real estate transactions is Ignite Funding looking for? What does our portfolio look like? What are we offering to our investors? Well, you can't be a one-trick pony in real estate. Real estate requires you to be nimble. And to be nimble, you have to have knowledge on both the residential side as well as the commercial side. So at Ignite Funding, our portfolio is built two ways. One is working with long-term borrowers. The other is working in asset classes that are specific to what's going on in that market, right? Not every market is going to be able to support entry-level home buyers. Not every market is going to be able to support additional shopping plazas, right? There are already an abundance of them. So what Ignite Funding is looking for is where the supply and demand needs are. So we provide investments both from residential lending and commercial lending. So our borrowers come to us on both sides of the fence. That includes the acquisition. So if it is from a home builder's perspective, the acquisition could be the land for them to future build a master plan community on. That would be an acquisition. From the commercial side, acquisition could mean that they're acquiring an existing structure, because at today's values, right, it's cheaper to acquire and put value add in as opposed to building from the ground up. The development side, same scenario, both from residential and commercial. Residential, the development is, your gutters, you're running the power, water, et cetera, sidewalks, those sorts of things. Where on the commercial side of things, the development, really could be the expansion of a project that is already existing, and the development of that, or the development of the land that the commercial project is sitting on. Maybe there's so much land surrounding the commercial project that it makes sense to put, a storage facility on the back end of the project. And construction is pretty much what it means. From the commercial side, it would mean TI improvements. So that commercial loan could include, tenant improvements that are necessary to increase the cap values of that property. From residential, it's exactly what it means. We are helping home builders build homes. So that's what a trust deed is, and those are the types of investments that we're looking for. So let's talk about what makes Ignite Funding different. We alluded to that a little bit as it pertains to, not being a fund and actually investing in the collateral itself. The other way that we're different is typically when you're investing in a fund, there's a barrier to entry of $50,000 or greater. And it starts to really push out middle America. It really does. And what we want everybody to understand is it doesn't need to take millions of dollars to invest in real estate. And in fact, one of the things that I learned after going through the real estate crisis in 2008 is that the lower barrier to entry for an investor is really what we should maintain and stay focused on. Because I don't want somebody to come to Ignite Funding and, put $1 million in. And I know that sounds crazy. Carrie, what are you thinking? Why would you ever say that? I say that because I think everybody needs to do their due diligence. Everybody needs to experience investing. And in order to allow people to experience that, I have reduced our minimum investment amount to $10,000. And I did this as we were coming out of an awful real estate collapse. And I've kept it there. I've kept it there because I want investors to experience this. I want everybody to have an opportunity to experience investing in real estate in a passive manner. The geographic and borrower diversification and mitigating risk is huge for us. Again, a lot of my experiences come from prior experiences and not repeating prior experiences to ensure that I'm preserving investor capital. And the way that I do this is through mitigating that risk. And mitigating that risk means that you have to have a diversified portfolio, not just from an investor perspective, but from a company perspective. I need to be providing you investments that are offering you the opportunity to diversify your real estate portfolio, both in commercial, residential, with different borrowers, different locations, right? Having all of your eggs in one basket doesn't make a whole lot of sense. And I know there are some companies out there that do specialize in just apartments or just storage or just senior living facilities. I believe that it's very important to hire individuals that specialize in all of those areas so that we can offer all of those types of real estate investments to you. In doing so, I also have to provide the geographical diversification. And that geographical diversification primarily keeps us in the Western United States. I stay in the Western United States because the vast majority of the Western United States are also non-judicial states. What this means for you is when we have to foreclose on a property, if or when it happens, we can take back those assets without going through the judicial process of, the the legalities that could take years to take back these projects. We don't want our investors to be stuck with years of litigation. So that's why that's very important. The less volatility, collateralized investments. I will say this to you. I say this to everybody. I'm an investor myself in real estate. I live, eat, and breathe it. I'm looking for the least volatile opportunities. And again, I invest in real estate funds myself. I firmly believe that there is a place for real estate investors to invest in that when you're very specifically looking for a certain asset type. Maybe you see that asset type as being, I'll call it recession proof, right? I don't know that anything's recession proof, but let's call it recession proof. I'm looking for the opportunities to reduce my risk as much as possible. Reducing your risk to me, also means investing in the collateral itself. And that's an opportunity that Ignite Funding will give you because you'll have a multitude of investments to choose from. And every month, you're going to have different investments that you can choose from. And it's okay if you want to wait for something that is, maybe you have more knowledge about. Maybe senior living facilities is something you're more interested in. It's okay to wait for those types of opportunities if that's specifically what you're looking for. But I think what you're going to find is that level of diversification inside of your real estate portfolio is also very, very important, because I don't know of anything that truly is recession proof. There are some things that, I could probably lean to. I'll give you, for instance, investing right now for us in entry-level home builders, at entry-level price points, doesn't make a whole lot of sense. And in fact, about 18 months ago, I started modifying or reducing that volatility in our portfolio out of that. Because as you see the interest rates increasing, the entry-level home buyers are finding it harder and harder to be able to close on their homes. And so for us, we want to make sure that we're pulling our portfolio out of that and putting our dollars into something that is a little bit more recession proof or is not going to be impacted by the increased interest rates. So certainly something that we're considering as an overall portfolio diversification before we're offering that to our investors. So consistency of monthly income. This is another one that I love to be able to provide to our investors. Some people call it mailbox money. Obviously, we're not sending a whole lot of checks out this day and age. But every single month when you invest in Ignite Funding, what happens is your investments. So let's say you're investing in January 15th, let's just say. There are 15 days of interest. We're run just like your general mortgage. It's a 30-day month clock for your interest payments. That will be paid to you the following month on the 15th. So every single month, for simple math, let's call it a 12% return. Every single month, you would be receiving 1%. 1% of what you invested in your investment at Ignite Funding would be coming to you, to whatever bank account you've designated, every single month, month after month after month after month. You don't have to wait for a quarter. You don't have to wait till the end of the year. It's not a biannual payment. Every single month you're receiving that income. That passive income, a lot of our investors are using through their self-directed IRAs. Now, let's think about this for just a second. When you're using your qualified funds to invest in, and you are of age where you're taking distributions, this distribution of what you're earning on your capital, you're taking as a distribution. You're never dipping in to the collateral, your hard-earned money that you worked very, very hard to put aside. You're never tapping into that collateral. You're only utilizing that passive income as a distribution to you every single month. How cool is that? And I know, like working with NuView and other custodians, I mean, it's awesome. I mean, when our investors come to us and they connect all the dots of this passive income and receiving it on a monthly basis, it instantly, you really can change lives because this passive income becomes their distribution. They're using this to live a happy and healthy retirement. Deal flow. Oh my gosh, this is probably the biggest topic that's out there right now. Everybody's looking for deal flow. we have all this capital, right? You see these crowdfunding platforms, they have all this capital, but they have no place to put it. So sometimes you're waiting up to 6 months to be able to deploy your capital to make money on it. That is certainly not a problem at Ignite Funding. And the reason why it's not is because we have been working with reputable borrowers for more than 10 years. They depend on us every single month to be increasing their flow with us. They want to utilize us more because it's easier to work with Ignite Funding than it is working with the banks. That doesn't mean they're not bankable borrowers by any stretch of the imagination. But if you can close a loan as a borrower within 3 weeks, as opposed to 3 months, there's value added in closing earlier. By the time the bank would close on it, we'll have all the TI improvements done and tenants in place. So really utilizing us, although we may be a little bit more expensive than banks, which that interest gap is closing, they use us time and time and time again, which is really great. Let's talk about our deal flow for just a second. There are, quite a few, and again, I'm trying to keep this educational because there's a lot of mortgage brokers out there, and mortgage brokers in general are probably not funding as much as we are. The reason why we're funding as much as we are is because we have been around a long time. We have done this. We've done this prior to collapses in the market. We're doing it after collapses in the market. We understand and know very well how to make sure that we are mitigating our risks for our investors while providing a great return. And our borrowers have come to trust that we will be there for them. So I just want to give you a quick synopsis of our deal flow. November, December, you can see the numbers on the board. 27 million in November we funded. That comprised of 22 loans. December was 28 million with 25 loans. January, we're down a little bit, very much to be expected. That's very normal for us. We are closing out strong at the end of the year. Borrowers are looking to put things on their books, take things off their books. Again, in February, we're teed up for another 28 million. So truly the deal flow is not the issue. So if you're having that issue, come to us, look at what we have, look at what we're offering. If you find something that you like, invest in it. So why add trust deeds into your self-directed IRA? Well, I think I've given you a couple reasons why clients do it. And in fact, I need to tell you that we have over $100 million of self-directed IRA investments in our investments as of today. That's a huge number. That tells me that the education that we're providing about being able to utilize your self-directed IRA in this type of investment is working. People are earning a lot of money within their self-directed IRA in a passive income. This isn't a rental property that you're going to get that 3 o'clock in the morning, phone call. That is not what's going to happen here. This truly is passive. We take care of everything for you. We originate it. We're mitigating the risk for you. We're providing you a lot of details about the project that you're investing in. We're monitoring it on the loan servicing side. And we are, again, I always lead with risk, and we're collecting if we need be. So the collection, anybody has any questions, we'll answer them at the end. But of the $1.5 billion that we have funded, we have in total 3%, a little under 3%, but I'll call it 3%. We'll round it up. That has defaulted. Currently, where we sit is we have $1.3 million in default, 1.3 million. So very, very low default rates. That's because our underwriting standards are top notch. So let's look at this. As a real estate investor, one of the things I always say is, you have options. And I think one of the greatest gifts that the government has given us is a Roth IRA. Second to that would be your traditional IRAs. Your solo 401ks, they all have advantages. But let's be honest, the Roth IRA probably has the best advantage. And that is the income that's derived off of your investments is coming back to you in most cases. Again, real estate does have some nuances. I don't want to sit here and pretend like they don't. But this type of investment, this passive investment, there is no additional tax on it. There's no UBIT tax. There's no UDFI tax. None of those taxes pertain to this because it is a passive income. So in that, let's look at what's on the screen here. We have a lot of investors that invest in cash. There's nothing wrong with that. But what does it look like on the net income of what you're actually receiving? For a cash investment of $10,000, interest earned on that of $1,000, I'm assuming we're being taxed at that 30% mark, so $300, the net income $700. If you're investing through a Roth IRA, tax-free, all of that's coming back to you. So if you have a Roth IRA sitting out there and not doing anything, get it working. Like, why let those funds sit in cash? It really doesn't make any sense. And here's an opportunity that you could utilize and get these tremendous returns with a lower volatility, collateralized by actual asset itself that, by the way, you own. You're on the exhibit. It's yours. It's not Ignite Funding's. It is yours. Why wouldn't you do it? So the reason why I show this is there's a, cash versus qualified funds. Again, we have thousands of clients that use qualified funds for good reason. So how do you get started? I talked a little bit about the fact that, we do have a high percentage of clients that use self-directed IRAs, and that's only because we educate clients about it. I would say most of our clients that come to us didn't even know this option existed for them. I know that NuView, and for those of you that already have your accounts there, if you have cash sitting in your account, this might be an interesting opportunity for you in real estate. Look at all your options though. Make sure you're looking at all of your options. Make sure it's a good fit for your self-directed IRA. Custodial accounts, we do have custodial accounts as well. Individuals like to invest with pension funds, profit sharing funds, 401ks. Heck, my son even invests with us. So obviously the sky's the limit when it comes to that. We have cash accounts, individual joint trust accounts as well, and also business accounts. A lot of businesses have found that as they have been, have capital that's building up, they're looking for ways to invest that capital, especially since the volatility of the stock market. We have had a lot of businesses come to us looking for a place to park cash. And so if you are a business owner and you're looking for that opportunity, that is something that we can also discuss with you. So let's look at the steps. I've talked a lot, and I know it's a lot of information to get out there in a very short period of time. Let's talk through exactly how this happens. How do you become an investor at Ignite Funding, and what does this mean to you? First and foremost, you do have to open up an account with Ignite Funding. I promise you, it is the most painless account opening that you will experience. The reality is we need to know what type of account you're opening with us. We need to make sure that we can report the taxes on your income appropriately. We need to make sure that you are suitable for that and for our investment. The suitability requirements are $70,000 household income or a $250,000 net worth, which excludes your primary residence. Once we have determined that, we're ready to get started. Now you will be able to select your investments. All of our investments are available on our website, but we are not a crowdfunding platform. You are not going to click on a button on our website and be able to invest. And I know that would be great and that would be simple, but the reality is we're a different type of lending organization. We like to talk with our investors. We want to know exactly what your strategy is, what you're looking for. Suitability does not just happen with numbers. Suitability also happens with understanding our clients and what our investors' goals are. If your goals are unrealistic, we will let you know your goals are unrealistic. If your goals are realistic, we'll talk with you about the different types of investments that we offer. We also want to make sure that you understand the investment and the risks involved in that investment. That's very, very important to me, so that you know exactly what the investment entails, the duration of time. Most of our investments are 9-month duration with a 9-month potential extension. The borrower has the ability to extend. So we want to make sure that you understand that. And you're not looking at on month 9, that absolute day that you're going to get your funds back. That's not always the case. So we want to make sure you understand that. So selecting that investment, duration of time, location, borrower, asset type, we really want to make sure to have that opportunity to have that conversation with you. Then you will complete loan documentation and you will send the funds. Our loan documentation is based on our regulatory requirements that we have to follow. And all of that paperwork is completed through Adobe Sign, so electronically. It's pretty painless. We also do require that a special power of attorney be executed by our investors and notarized. And the reason why we require that is because Ignite Funding is acting on your behalf as it pertains to funding the loan and collecting the borrower payments and servicing the loan, i.e. sending the payments to you. So we need to make sure that we have the authority to do that and that you do not have to act in that capacity, i.e. making it a passive investment. The funds then are provided to us. In this particular situation that we're talking about today, the funds would come from your custodian. So we will be completing additional paperwork with each of the custodians to make sure that the custodian has the paperwork that they need to document their files, because not only will you have an account with us where we're able to report to you exactly what your investments are, you're going to see your investments also on your portal with NuView. So we want to make sure that those two portals, that information is matching from both perspectives. The funds are then sent to us, again, depending upon how you're investing. In this particular case, let's say they're coming from the custodian. Once the funds have all been accumulated by all investors that are on that loan, we will fund that loan. Once that loan is funded, you will receive some post-closing documentation. The post-closing documentation is the security to your collateral. So Ignite Funding, there's a few pieces of the puzzle here. You want to make sure that you get, if it's not coming from Ignite Funding, make sure it's coming from your other investments if you're investing in trust deeds. So here's what you should expect for your post-closing documentation. You will receive the recorded deed in the county that the property is located. You're going to receive the promissory note that's associated between the borrower and Ignite Funding on your behalf. And this illustrates the terms and the payment that they should expect to receive. Third, you're going to receive insurance. Two forms of insurance. The first is a title policy. The title policy is to illustrate the insurance of clear title on the asset that you own. So before we fund our loans, we obviously run some preliminary title reports, make sure everything is cleared, the path is cleared, if you will, for your investment, because your investment is in a first lien position. And to ensure that it's in a first lien position, that preliminary title report is done prior to funding. And then post-funding, we're getting a title policy. So if anything is to arise after the fact, we are able to lean on that title policy and say, wait a second, all of this was supposed to be cleared. We have clear title. So that title policy proves that. And then the fourth item is I require insurance carried by our borrowers on behalf or for the benefit of our investors. Why would you want to do this? Why would we want to be insured on those policies and endorsed on those policies? Because if we were building the construction of a home and the home burns down, I do not want the borrower to be able to file that claim unbeknownst to Ignite Funding, receive the benefits from that claim, and then the borrower walk away from the property. Oh, no. That's not how it works there. If the borrower files a claim against the property, Ignite Funding will also be notified. Ignite Funding on that claim check that borrower would receive, it would be Ignite Funding and the borrower's name. Key point, and they cannot act without us. So that's very, very important. Those 4 forms of post-closing documents will come to you. We recommend that our clients keep that documentation because, if something were to happen to Ignite Funding and we were not here to service your loan, that is your documentation and proof that you have ownership in that collateral. So, super important. Make sure you keep that documentation. And then what starts happening is you start collecting interest. Passive investment every month, like I said, on the 15th, either we're sending a check out to you, which we have very few clients that request a check. Most clients are receiving ACH payments into their bank account. Now, all of this information you can see on our website as well. We track all the transactions that are coming and going out of your account. So you will have a unique login and you will be able to see all of the transaction detail as it occurs. But the likelihood of you going there and checking that as frequently as seeing a deposit in your bank account, I guarantee you're checking your bank account more frequently than you're checking our portals. Even though I like to think that you're checking the portal, I know the reality. So check your bank accounts. You will see those funds hit. Like I said, we ACH everything. So 15th, 16th of the month. And then what happens? What happens at the end, Carrie? So I'm on a loan. I've been on the loan for 10 months. I've been receiving my interest payments every month. And now all of a sudden the borrower pays off the loan. Well, this isn't a bad thing, everybody. This is a good thing. But what it does is it does require you to have to select another investment to get those funds redeployed so that we can keep earning interest, keep earning that passive income. And once that loan's repaid, I guarantee you this, you're going to receive communication from us, both in an electronic format as well as in person. Like I said, I'm very old school. I want to make sure that our investors get an opportunity to talk to us. And that does not just pertain to your first investment, that pertains to every investment thereafter. That's the process. Seems pretty simple, right? So I'm sure you're wondering, what's the catch? There is no catch. And in fact, what I would say to you is, text investments at this phone number that's on the screen. The reason why I say to do this is we're not a high pressure sales environment. That's just not what we do. In fact, 50% of all of our clients come from referrals. So our marketing that we do from Ignite Funding's perspective is to keep growing our portfolio so it can provide more financing to our borrowers and more investments to our investors. But if you text this, you're going to be able to at least see the investments that we're offering as they're released. I don't typically do this. It's something that we hold kind of a little bit tight to our chest. And we utilize for our existing investors so that our existing investors have an opportunity to get on loans before new investors are. But for you guys, I'm putting it out there. Text this number. Look at the investments. You see something that interests you, give us a call. Give us a call. Get started. Get your application completed. You can do that online if you would like, but we really want to talk to you. We want to understand what it is exactly that you're looking for in your real estate investments. I am now going to open it up for questions. My information here on the screen, be able to reach out to us. Our website is there, ignitefunding.com. You can always email us at info@ignitefunding.com. And I know you're probably thinking, oh, how generic is that, Carrie? Everybody sees that email, so it will get picked up. Or you can always call us, 702-761-0000. All right, I am ready to open it up for questions. I think we have a little bit of time for that.
Yeah, absolutely. Thank you so much, Carrie. Real estate investing is always something that people want to get into, right? But until they realize, the task and work and effort that's required in operating a deal, sourcing a deal, funding a deal, et cetera, right? Dealing with the toilets and tenants, it really, it's hard to, get your head around where you can fit in, right? And I think that, a passive investment, especially through a self-directed IRA account, is really a perfect match. And so thank you so much for sharing that. You kind of touched on it a little bit, rising interest rates, kind of causing real estate investors to become a little bit more creative when seeking financing. You also mentioned some of the other benefits of, funding these deals a lot quicker than a traditional bank. Where do you see the market going, I guess, in 2023? Will it continue to rise in popularity to seek, funds from companies like Ignite?
Yeah. So this is kind of a loaded question. I'm getting two questions from what you're saying. So I'm gonna try to address both. The first is, do I continue to see borrowers needing companies such as ours when they can go to a bank for a lower interest rate? Here's how I answer that question. When the interest rates were at 2%, they were still coming to Ignite Funding. The borrowers were still coming to Ignite Funding paying 12%. There's a reason why. We're starting to see that interest rate gap. I mean, obviously, it's closing in, right?
Sure.
So if we're at 12% and the banks now are at 8%, it's closing in. Why, Carrie, are you not increasing your interest rate? So those are the two questions I hear. One is, why do they keep coming back to us? And the second is, are you going to increase your interest rates? So let's take the first question. Borrowers come to us because of speed and agility. Real estate transactions don't wait around. They are on a time frame. They have to close on a specific day or they lose potentially money that they have invested. right?
Yep.
Or they could potentially lose opportunity of time to get something completed to be able to
Sure.
get out to market and sell it. Those two factors, I don't want to say it puts us in a priceless situation, but it really is putting us in a priceless situation. The interest rates were low, and it will when the interest rates are high. We can move much, much quicker. And here's why. Banks, when they underwrite these types of investments, they spend the majority of their time focused on the borrower, the credit report, the this, the that. Let's be honest. Who cares? We're talking about asset-based lending. That's what Ignite Funding does. We focus 75% of our time on the asset, not the borrower. And I don't want this to be perceived as the fact that we are not spending the time to get to know our borrowers and know what they're able to do and what their history is. That's not the case at all. But my job is to protect the asset on behalf of our investors. So if I'm underwriting that asset at 60% of its value and our investors are investing in it at 60% of its value, that leaves me a 40% equity cushion. That means my borrower has skin in the game. Typically,
Sure.
when you go to the bank, they're lending at a much higher percentage to that borrower, right? And it's easier to walk away from that. But they're waiting forever for that financing. So they're coming to Ignite Funding because of speed and because we're looking at the asset. We understand real estate. I'm not
Sure.
saying banks don't understand real estate, but they're spending way too much time on the borrower and wasting time on that when we're not wasting time on that. We get in there right away, rip the asset apart, look at what the value is, look at what their construction budget is, look at what their exit strategy is, and we can move much, much quicker. So their 3-month due diligence process is a 3-week process for us. So I'm not going to sit here and say that we turn investments, so quickly that, we're not even looking at them. Oh, we are. We are absolutely looking at them. In fact, we coined a phrase, loan to own. Not because we want to own it, but because we should only be lending on things that we are 100% comfortable owning, period. Now, as far as that interest rate gap, let's talk about that for just a second. Our borrowers are bankable borrowers. Most of our borrowers have well over $100 million lines of credit with banks.
Hmm.
Seems crazy, right? Why are they still coming to us? Well, banks are not lending because it's an acquisition, right? Their portfolio is full of acquisition. They need to go somewhere for it. I have not increased our interest rates yet. I'm saying yet because I'm holding out a little bit longer. I do not lead by fear. I
Mm-hmm.
don't lead by fear. I want to make sure that we minimize that volatility to our investors. So me going out like everybody else and jacking up the rates to 15% on a borrower that's been with us for 10 years provides quality real estate investments at a good, solid, stable 10 to 12% return to our investors. Why mess with that? Especially when we have no idea whether we're going to make a hard landing on this or we're going to make a soft landing on this.
Sure.
I don't know. Are we going to come back down in interest rates? And then I've gone out and I've, put this onus on my borrowers that we've increased rates. I'm not quite ready to make that decision yet.
Well, great food for thought. Kind of shifting focus to the investor. You had touched on a low barrier of entry, a $10,000 minimum investment, which is fantastic. I mean, many of the passive investments that we see come through, our doors are, only available to those accredited investors, right, or
Mm-hmm.
high net worth individuals. Do you have the same restrictions with your investments?
No. So accredited investors are not a requirement for us.
Okay.
We are not a fund. We are not falling under the SEC rules and guidance on that. That's why we only specifically stay in states where those guidances aren't applicable to our lending. We stay in states where commercial lending is acceptable outside of a fund. That's our focus. That's what we stay focused on. It's harder to lend that way, right? Because I don't want to say I'm hurting a lot of investors, but I really am. I'm hurting a lot of people to get their funds in, get their paperwork completed. And that onus is on us, and we do a very, very good job at doing that. So we stay in our arena, if you will, in that regard. But we do fall under our parent state guidelines, and our parent state is Nevada, which has one of the most strict commercial lending guidelines in the country. And it does require us and our investors to verify. I say verify. They're verifying it through completing documentation that
Sure.
they have the suitability requirements of a $70,000 household income or a $250,000 net worth requirement minus
Okay.
their home. So it is much lower. But your Reg A plus offerings, those sorts of things that we're seeing a lot of out there, fall under that same type of criteria. So that criteria has to be met. And I say met, I'm not verifying that. I'm not asking you to send me your tax returns. That is not what we do. But you do have to sign off on the fact that you are suitable for these types of investments.
Okay. Okay. And is it harder to invest at Ignite Funding with the self-directed IRA, or is it just as easy as any other investment?
It depends on the custodian. Not all custodians are friendly to trustee investing. And what I mean by that is there is no recorded documents until we fund the loan. So
Sure.
that's sometimes a hard concept for custodians to understand. It does require an additional layer of paperwork to be completed because the custodian needs to know what assets they're custodying on behalf of their clients. So there is a DOI that has to be completed, which is a direction of investment. For most custodians require that. I don't know. Well, actually, there's none that don't. They all should. And I believe NuView does as well. And so once we complete that on behalf of the custodian, so they know what type of investment, and they get to know Ignite Funding, which NuView has. We do have clients with you. So once you get through that first initial process so they know what to expect, it's very, very smooth process. So it does delay it by maybe a day or so, but we're backing into those dates. So if our funding date's on the 15th, we will require any custodial investors that they have to have all their paperwork and docs in further out than a cash client that could easily wire us the funds same day. So we'll just back it up about 5 days, make sure we're able to get all that paperwork completed and the funds transferred to us from the custodian. So a couple little nuances there, but we'll walk through that with the client. That's absolutely not a problem. We work with a lot of custodians. As you can imagine, if you go to our website, you'll see that we have what I would call friendly trust deed custodians that are on our website. And those custodians are custodians that we know understand this type of investment and have worked with us in the past and can move the funds very quickly.
Well, great. I don't want to take up all of your time answering my questions. I definitely want to highlight some that came in from our viewers. So one of the questions that came in from our viewers was, does Ignite Funding charge fees for investing?
No. And this always comes really odd to people. Carrie, how can you run this business and not charge fees? So let's talk about how Ignite Funding makes our money. And then because the simple answer is no. Ignite Funding is paid by the origination fee that the borrower is paying to originate the loan. Typically, that origination fee is somewhere between 2 and 4% of the value of the funds that we're lending to them. Those funds we use for operational purposes, right? This is how we pay our employees, keep the lights on, et cetera. Because Ignite Funding is not a one-trick pony in the sense that we are only originating the loan to put investors on it and then peace out, that's not what we do. So
Sure.
our additional revenue stream comes from our loan servicing, which is, again, another reason why we don't charge our clients fees. So if our borrower is paying 14%, let's say, or 12%, we are offering that to our investors, typically 1 to 1.5% less, depending upon the project, how much work's going to be involved, how many visits we need to make, et cetera. So we collect a fee on the servicing. So between those two fees, we can very easily operate our business without having to charge our investors. So again, paralleling, like a fund, if you were to go, invest in a fund, typically what you would see is if you're going to invest $10,000, a portion of that's going to be utilized for the management fee of that fund. Where at Ignite Funding, when you invest $10,000 actually goes into the investment itself.
Good deal. Looking here now just to see if there was any other questions. Anybody viewing, again, feel free to drop additional questions in the comment section otherwise, again, there is a form to submit some questions as well. And then otherwise, just 1 second, we're having a difficulty there. I'm sorry, Carrie, just 1 second here.
No, not a problem.
I apologize, guys. A little technical difficulties getting that question up. Again, we touched on it a little bit, right? And how Ignite funding competes with banks, right? Again,
Mhm.
making borrowing faster, a little bit more accessible, and being able to get much further along. Was there anything else that you wanted to add to that?
I will say this: when banks aren't lending, we are. So, as an investor, if you have the opportunity to be the bank, why wouldn't you be the bank? Why allow the banks to make the 8% on your money? Get your money out of the bank, invest it, and you earn the 10% investment. So, what I would say to that is, and I think we've already covered it as far as why they come to us and not the bank, we're just a bolt on, right? They already have bank financing. We're here when they need us to close. You know what I find interesting? I'll say this. I love telling this story. Most people do not realize, unless you're a home builder, that the inventory in order to build a house, you have to go back about 2 to 3 years and start acquiring the land. It, they don't just buy the land and the house just starts, erecting. It doesn't
Sure.
work that way. So their inventory of acquiring that land to build those houses 2 years later, banks will give you hundreds of millions of dollars of lines of credit to do the construction, but they will not finance your acquisition of the land. Think about this for just a second. So companies like Ignite Funding exist so that the infrastructure of this country can continue on. Because if we weren't lending on the acquisition of the land, how in the heck would these home builders ever build a house?
Sure.
So, we play a very strategic role in the infrastructure of this country. There's a lot of companies like ours and individuals out there that are lending their funds so that we can get to the end goal here. And so when banks aren't lending, we are. It doesn't make what we're lending on any less valuable, any more risky. It's just their model and their board of directors have directed that banking financing to be very specific. And that's why we exist. I mean, that's why you see a lot of acquisition from us. That's why you see a lot of development. And then you don't see a lot of construction. That's why. That's why you don't see it.
Well, interesting answer. Great food for thought. Carrie, always a pleasure to have you on. So thank you so much for everything today. Anybody viewing, if you would like to learn more or get in contact with Ignite, feel free to email them at marketing@ignitefunding.com or call them at 702-761-0000.